What is going on, guys? It's Blanket Trader. Today is Wednesday, the 27th, and the market is going higher. Let's go over the some things that I want to share with you guys, and let's make sure that we are prepared for the rest of the week. So, the first thing I want to start off with is the S&P futures currently sitting at 3,046, up 0.35% in after hours. Speaking of that, let me quickly turn on the after hours trading. So, what we are looking for is if I go down into an hourly chart, you could see that we are breaking out of the volume profile range that we were in. So now we are breaking out higher, and see how the volume drops off right here? Well, that means that we're entering a volume pocket, and what that basically means is price is going to move quickly through this area because there's little volume that took place. So it's going to want to move into an area where price has been discovered before, where price is familiar, I like to think of it. So this zone right here is our next target, and that zone is from 3120 and 3080. But we do have and yes, we are entering it. So we really do want to see either some quick rejection back into this 3000 area, is what we want to see for the bear case scenario. And I know we did take some shorts in my trade room. We have McDonald's short, and we also have Apple shorts. So I want to see the market come down, but right now it's looking like a bullish breakout, and their next target is this area, and then ultimately it's the point of control at 3200, which is insane. So these are the targets to watch. You can see the market reversed here in the past. This was also an area where the market broke out, so it's going to be a tug of war here. Now, if we did take this range that we were in, about here, and we break out and we use a measured move theory, then that will take us all the way right to our point of control of that 3200 and beyond. Kind of a scary thought. People want to buy stocks at a cheaper price. Well, yeah, they're not going to be able to get them for a cheaper price if this market keeps going higher. All right, so that's going to be the S&P 500. So some key levels to watch out for is at 3080, and this zone right here just above. I want to see some quick rejection, and if we do get that, I think that we have the possibility of coming all the way back down into this 2931 area and below. So keep an eye on that. On Friday, at the closing bell, the market was pricing in a $75 expected move, which would have put us exactly on that 3030. So now we're skirting past that expected move. So one thing I want to talk about is the weekly expected move. Now we are sitting on that weekly expected move. This is going to act as resistance, because what big firms do is they come into the week and they look at what the expected move is, and they could see that by going into the option chain, clicking on the Friday expiration at the beginning of the week, and you could either place a straddle call, and that straddle will tell you how much the market is expected to move if you place one at the money. Or Thinkorswim has a cool little tool right here on the top right where you could see the weekly expected moves or the expected move for that certain expiration date. So now until tomorrow, we have a $47 expected move. But last Friday, after the market closed, the market was pricing in that we had a $75 expected move. And that $75 would have put us right at that like 3,030 level, which we are now a little bit above. This is the auto expected move, so it's a little off. So it's saying that the expected move is at 3,056 area. So what happens is that big firms, they sell option premium, and what they do is they go outside of the expected moves and they sell option premium. Okay, because there's a high probability that the market will stay inside its expected move for the week. So they go outside, sell option premium, collect their premium, wash their hands, rinse and repeat every week. Okay, now what happens is if price gets outside into their expected move, these people who sold the premium start having to cover. So what happens is they have to buy back their positions, or they have to add long positions to even out their portfolio. And what that'll cause is a big squeeze to the upside in that case. But the other case would be they win, they fight it, and they knock it back down so that the market can stay inside of its expected move. So we definitely want to keep an eye out on this 3,056 level and make sure that the market doesn't start blowing through it, because if that happens, then we could easily see that 3,080, and then we could easily get into this level tomorrow. And you could see how the market back here was making huge outlandish moves, and who's to think that that's over? I mean, look at this move right here. That would take us all the way down like to here. So if you think that you're all out of the woods yet, just wait till you get one of these days that takes us all the way down back into the lower end of this range. Can you imagine that? Yeah, well, that's what was going on all through here. So don't think that it cannot happen again. But also, this candle could easily go to the upside, and look at where that would take us, all the way back into all-time high area. Just crazy. So the market really can go either way, and it can go either way quick, so be on the lookout. And a lot of us, I want the market to go down, to be completely honest, and I'm sure a lot of other people do too, because nobody wants to see the market keep going up unless they're already positioned in it. So that being said, that's the S&P. Let's go over the two stocks. I don't want us to get shaken out because we did get into Apple. So I'm gonna put on my MACD and RSI on Apple, and you could see that we're still having the crossover. The MACD is still pointing down, so we're still short Apple. This is a great short in my opinion. We're at the all-time highs, so we could easily start coming back down. It's usually what happens when you hear the term buy low, sell high. Well, that's what it means. It means sell at previous tops and buy at previous bottoms. So the buy low, sell high structure is here. The indicators are on our side. Imagine if this keeps going up. Where is the MACD going to go? This is the highest point, so it's going to get pinned up here. No, this thing needs to cycle back down a little, and in my opinion, that's what it's going to do. Our profit target is 300 on Apple. And then McDonald's, another one. Now this one, the indicators aren't on our side, but indicators are typically like, they don't work all that often anyways. Now, why I like McDonald's is because we're also at a previous high. So the concept sell high, buy low. And then if we go ahead and open up my volume profile, we're going to see that this is the range that we are in, McDonald's. So right here into right here. Oops. Right here into right here. This is this volume profile range. I'm looking for it to come back down into it. My target is right here at 180, or actually the target really is 175. I want McDonald's to come down pretty hard, but we could see McDonald's potentially, shoot up into this range, which would suck, but I don't know who's gonna, I don't know who's buying McDonald's at all-time highs, but a trade is a trade. You can't make it work. So if we take the trade and it doesn't work, oh well. But what we are looking for is a move back down, also to fill this gap down here. But there's nothing we could do if the market wants to go parabolic besides get in the right side of the trade intraday and try to make some of that money back. So again, the sectors that are outperforming, financials, outperforming today, up 4.3%, was up 6% yesterday, so 10% in one day, which is amazing. We got two big moves right into this lower volume extreme on a daily chart, the financials, and then we have this big volume area up above along with the point of control at 2650. 2650 is a very key level in the financials. I would be shocked if we get back up into that level. Energy still performing pretty well. And then the lagger today, which was also yesterday, was technology. We actually started the morning with technology really down big. We still have Amazon in the red. It was much more red, though, in the beginning of the day. So you could see that it made a big hammer candle. So we'll see what happens. This is typically a reversal candle to the upside. And since this stock is at all-time highs, if the market starts going higher, these stocks are going to be the ones to push it higher. Another one was Netflix, and we caught that one, or I caught that one perfectly today. I literally bought it at the bottom. I sold it like at 307 or 407 for really nice gain, but I missed out on obviously a lot more. This thing was down like 4% and went up to 1%. That's over a 5% intraday swing, which is just insane if we look at the intraday chart. Completely insane. And so on. Now, one more thing I want to go over is the VVIX. So the VVIX has hit our target of that 110 level, came back down into it. I got my alert. I literally didn't even look and put on a short position on the SPX for Friday's expiration because I'm looking for an immediate bounce off of this level of the 110. And if this bounces higher, it's a volatility product. So what does that mean for the market? It should come down quite a bit. I'm looking for the market to come down. I'm looking for this to be a false breakout and a boom back into its point of control. 2800, 2842 is my target on the S&P 500. So I want the market to come to 2842, but I'm going to be just sitting on my hands, watching the market, seeing what happens tomorrow. I'm not going to get caught in a bull trap. If I do play the market tomorrow, it's going to be quick scalps, in and out, and so forth. So guys, I'm going to cut the video short. I was going to make this earlier, but didn't really find time. Hope you guys enjoyed. If you have any questions, please let me know, and I will talk to you guys soon. Take care.